So how's the day been, man?
Samir, it's been a great day. It's been a busy day. I think we like to keep it busy and productive here.
That's great to hear.
You know how we roll.
Yes, that's great to hear. So man, I had a few very interesting questions for you, given that you are the CIO of hBits
Yeah,
and in charge of all acquisition.
sure. Shoot.
How do you evaluate properties? What kind of markets do you look at, and how do you take your final decision?
Wow. So that's a lot to unpack, right? And that's a great question. See, I've been looking at real estate as a private equity investment professional, I think since 2007, 2008, pretty much just around when Lehman happened. And I think over the last 15, 16 years of investing in real estate, I've seen a bunch of cycles, some boom, some bust. And I think that really shapes your perspective on what's a viable real estate investment. I think here at hBits, it's a, I would say it's a list of three, four things, right? A, we're thinking of this as a fixed income product backed by a real asset. So for the fixed income part, we're looking at the lease tenure or the lease terms very closely. So that's the lease terms in terms of tenure, the residual lock-in period, the asset, the quality of the tenant itself. It's almost like a corporate bond on the lessee, right, or the tenant. So the tenant's financial statements, the tenant's financial position, we look at all those things. On the, obviously the rental, whether it's over-rented, under-rented, market rental, what is the security deposit, compared to, let's say, the notice period. That's in the, leave a license agreement or the lease deal. That's on the fixed income part. On the asset side, we look at the asset quality. It has to be a grade A asset, hopefully LEED certified, and a green building. Micro market analysis in terms of what's the current supply. If for some reason this tenant wanted to leave at the end of the lock-in period or some point, what is the releasability and at what number, right? Micro market analysis in terms of what's the current supply, what's the new supply, what is absorption last year, what is the projected supply coming in, where do we see capital values move in that market. So I think it's a holistic analysis starting from both bottom up and top down.
And what's your view in general around commercial real estate, specifically in Mumbai? What would you say?
Yeah, I think Bombay is a very interesting market. And let's say we compare it to Bangalore, right, as an example, or maybe even Hyderabad. These are IT-driven markets, right? Primarily ITS-driven markets, where some of the better developers and large developers love to sit on assets and generate a yield or a lease income, and then REIT it out or sell it to one of the large private equity houses operating in this space. We know who they are. In Bombay, it's a little bit different. There's a little bit of that, what I just spoke about. Plus, there is a fair amount of supply of grade A quality in certain micro markets like North Bangalore, like Central North, Andheri, Powai, as well as some BKC markets where enough supply exists for investors like us. We're not doing full buildings, not yet at least, but are looking at floors or units. And that market is very vibrant in Bombay. Just to give you an example, I think in the last 5 months since I joined, the team collectively has sourced about 13,500 crore worth of assets. That's about 175 transactions or deals or opportunities, averaging about 75 crore a transaction or opportunity. And we're averaging about 2,700 crore per month of total deal sourced at an average of 35 a month. That's a very vibrant market, right? It tells you there's good supply, good trading volumes between the HNI community and some institutional investors, family offices. We've seen a lot of growth in terms of returns, in terms of quality supply and capital appreciation.
People are talking about a recession in the US.
Yeah, yeah,
And the RBI has also paused hiking.
yeah.
What do you think it does to commercial real estate?
So I think I know as macro guys, we like to take a cue from the US market and global markets, and where that really plays a role and a big one is in the equity market. Luckily, I think the real estate market is a little bit insulated from these movements and vagaries. I'll tell you what, India is poised for I would say we're very lucky to be in India right now.
Right.
The next 5 years, our GDP is projected to double from $3.5 trillion to $7 trillion. We're going to be the largest growing large economy in the world. Our growth is both domestic driven as well as consumption domestically, as well as export driven, because Indian market can't possibly consume that level of GDP growth unless it's helped by fueled by some export as well.
Right.
So based on that, what we're going to see is growth in outsourcing. We're going to see a growth in domestic consumption, and
Which is already happening.
like even more growth, right?
Absolutely.
You need offices for that. You need warehouses for that.
Yeah.
You need commercial real estate for that. You need retail for that. I know e-commerce is a thing to stay and is wonderful, but retail is not going anywhere either. We're going to see a huge growth in data centers. We're going to see, and I know that's not happened yet, but it's bound to happen because of laws in India,
Yeah.
where locally it has to stay locally.
Right.
Where are we going to store that but data centers? So it'll take some time, but we'll get there. The other thing that's going to grow a little bit, or quite a bit, is R&D labs. These are FDA-approved facilities, or pharma labs, research labs, biotech labs. So that's that. We know for a fact, given on the backs of insurance growth in India, hospitals have become a great business.
Right.
Right? I mean, we've seen a lot of private equity play in that space. We're going to see growth in that business as well. Lastly, schools. India is all about education, has always been.
Yeah.
We're going to see a growth in schools. And for us, all of that is an investment opportunity.
So as CIO of hBits, what are you targeting in terms of assets under management, say in 9 to 12 months?
Yeah.
And do you have any focus in terms of any cities, or whether it's warehouses, data centers? Or what are you thinking as a CIO?
Okay, so let's unpack that. I think in terms of numbers, when I joined, we were at about 150 CR of AUM. We are maybe doubling or tripling that soon. By the end of this current financial year, I think we should hit 1,000 crore quite easily. I think we're on track to hit that number. Obviously, the sales, which is the investments and partnership team and distribution team, has to play along, but I think we're there. Our current sale velocity or distribution velocity is ramping up very nicely, and 1,000 crore in about a year. And if I can say, I think we intend to triple every year. That takes us to about 10,000 crore roughly in about 3 years from today.
And I guess then the question is, what are the risks you foresee in this journey of reaching 10,000?
Right. Ideally, what we want is a good risk-adjusted return. Fair enough. When you try to grow fast, and as we intend to, sometimes you can fall into the trap of taking undue risk.
Yeah.
And that's not the game we want to play. We want to do right by our investors. I think we have a fiduciary duty as investment advisors or managers to do right by them. It's about not falling into the trap of trying to achieve an AUM. No compromises on asset quality or the deal quality. The investment thesis has to remain tight. I think we have to be true to ourselves.
Thank you so much, Mayank.
Thank you,
That was
Samir.
very helpful. Thank you so much.
Cheers.
Cheers.
Thank you.